All right, guys. Good morning. Good morning. Happy Fed Day. Happy International Jerome Powell Day. And we'll hear from the rascal, the rascal known as Jerome. We'll hear from him around 1:30 Central, 2:30 Eastern. So I'm thinking maybe, I'll jump on the mic in my room for a little bit after this session. We'll hang out for a few, go through a few charts. As far as actively trading, I'm thinking holding off until, maybe power hour. If not power hour today, maybe tomorrow's open. Want to take things nice and easy into the JP. But all right, guys, as far as the trying to call for the next move from here, I think it's a tricky spot into the Fed. The theme I've got right now is just neutral. Neutral signals, neutral scores, neutral squeezes. And as a general statement, neutral kind of sucks to trade. For directional trades, buying calls, buying puts, neutral doesn't give you too much edge. So for example, if we check out the cash QQQ, and we're up about two bucks and change here into the open. If we check the big three buy and sell signals, we're neutral. All right, blue is just neutral. No buy triggers, no sell triggers. Not giving me too much to work with as far as, hey, I can call for a flush on the 15-minute, or I can call for a rally off of the hourly. So that's all pretty neutral. And then all the squeezes here. A lot of squeezes setting up in the futures. But a blue B3 is just a neutral squeeze, which is kind of just a glorified chop fest. Not the best structure, not the best trend, not overly bullish, not overly bearish. Chop, chopping. So some neutral signals, couple neutral squeezes, 15-minute on the Google, Tesla, TSM, Meta, Microsoft, Netflix, they're neutral. And then if we jump over here for a couple of minutes to the spreadsheet, as you would guess, it is a neutral spreadsheet. Which, yeah, if you compare it to the spreadsheet from 2, 3, 4, 5, 6 weeks ago, it's a lot of progress for the bulls. But not bad. They've got buy signals everywhere, full control. Wake up, blindfold yourself, and buy a call. I think we're very far from that kind of market. And believe me, I love that kind of market. But the QQQ has 17 points out of 120. Very far from the perfect short, also very far from the perfect long. S&P is a little bit sadder. They only got 6 points. Dow Jones -15 and the IWM a -31. So in comparison to the strongest total score possible for all the indexes, we are at -4% of that number. Have we seen worse? Definitely. Have we seen better? Better believe it. So index is just neutral, and then a few of these Big Ten names. I do like Netflix. Netflix of a 91. Microsoft not too bad. Broadcom not too bad. The rest are just neutral. Meta, Nvidia with 27 points. Google 13. Here's TSM with 3. Tesla with 1. And then a little negativity in Amazon and the Apple. And then looking at the sectors here, gold very strong, 116 points for gold. You've got the utilities trying to shape up. You got silver, XLP, Bitcoin, communications, industrials, financials. These guys are just neutral. And here's the thing: the most neutral names on the board, they also happen to be the biggest, most heavily weighted names. All right, big tech, big semis, Mag 7 stocks. You got the XLK with 11 points. The Big Ten basket with 5 points, and the entire semiconductor basket with a big 0. And again, if I'm trying to call for a really strong market, big breakout in the S&Ps, big breakout in the QQQ, I don't usually look towards, XLP, utilities, industrials. I don't look towards those kinds of things to lead the path higher. From a weighting perspective, the 5 or 10 names that make up 20, 30% of the indexes, if they can show leadership, it can make for a stronger market. And they're just kind of chopping, not breaking records, not breaking rules, pretty uneventful overall. So big question into today, tomorrow, Friday. Depending on the reaction to the Fed and Powell, Could we get a move above a couple of these really big levels of resistance? We got a good handful. You have your daily 200. That's 490 QQQ. And then if you check out the weekly chart, you've got the weekly 21 and the weekly 50. So I'm thinking 490 and the 495. If they can get and keep price back above that level, not in a straight shot, not overnight, but bigger picture. If they can rebuild it back above the weekly 21, there could be a path eventually back towards the all-time highs. All right, you flush, you rally, you flush. It gets a little bit spooky. Under your 21, under your 50, if they can at least get it back and keep it back above that level, never mind the push back towards all-time highs, the market can finally stabilize. Might make for a decent bit of back and forth, but they can get out of that pattern of we flush, rally back towards resistance, get rejected, and roll back over. So big levels on the QQQ, and then pretty much the same scoop here for the S&Ps. We can call it 5750-ish. That would have you back above your weekly 21, your weekly 50, your weekly up, and back above your daily 200 SMA. Below that, guys, I think we could be due for, pretty big flush here at any given point. Bigger picture, I don't love a weekly chart under those two levels. If you're above your 21, above your 50, better trend, better structure, it can make for a really strong market. You get hanging out below your 50, below your falling 21, can get a little bit sloppier than we would all like. But yeah, no plans here to buy any QQQ, short any S&Ps. We've got a couple trades open. I'll be patient. I'll walk my dog for a few hours. I'll come back around, maybe power hour. Then we'll find out how the cookie crumbled. But for me, something's got to change. Into Fed, during the Fed, and after the Fed, if the picture can't change, meaning I got a market below big levels. I've got no lower time frame buy signals, no lower time frame sell signals, bunch of neutral scores in a spreadsheet. If they can't change that picture after the Fed, I still think it's a tricky market to buy or short. Neutral is not easy. But all right, all that being said, what are a few things I do like? And for longs, that would be a couple of these bad boys. We've got Altria with a perfect 120, and then PM, some GLD, Duke, Travelers, Take Two, Zscaler, Crowd, AT&T, Utilities, EA Sports, and Mickey D's. Now, my preferences, not that the market cares, my preferences, though, I'm getting my Netflixes, my Googles, Nvidias, Apples, Amazons, Teslas. I'm getting them in my top 10, 15. If they've got 100 points, 115, 120, all right, now my most heavily weighted names are my strongest. Everything can benefit from that. Strength in these 10 names, that can be a great thing for the financial sector, can be a great thing for XLP, just tends to make for a stronger, easier market. We don't have that right now. Leadership is utilities, Dukes, consumer staples, little communications. These guys are just quietly camping. But all right, for a few of these well-ranked names, the Mo, the big MO. Very clean setup, bunch of buy signals, great alignment, and a mighty fine-looking 3-day squeeze. White arrow, the perfect score of 15, A+ on the 3-day. And yeah, now where would I want to buy it? And beggars can't be choosers, of course, but I'd like to buy it from a risk-reward perspective. We're always going to get the best entries near that 21 EMA. If it's a 15-minute squeeze, you're looking at your 15-minute 21. If it is your monthly squeeze, you're looking for an entry near the monthly 21. So right now it trades 60-50, buy zones around 58. Now I can buy it up here in a fashion where I don't mind to pull back into 58. That's plenty of time till expiration, that small size. That's also, hey, if I'm buying up here at 60 and we do pull back towards that buy zone, I'm probably going to buy a little bit more. So I'm liking the big MO, and from that we can jump to PM. Very steady as she goes action. Let's see. I think we got a 4-hour squeeze. Yes, a really, really clean 4-hour squeeze, but I don't love the entry. I am wrong back under 169.50. The stock trades 174. My target is 176. Okay, so if I buy it around 174, I've got about $2 and change of reward. But if I buy it for 174 and catch a pullback into, I'll round up and call it 170. I'm looking at about $4 of risk, and really a little bit more than $4. I think ideally we want to get on the other end of that. If I can buy it around 172, I'll take on about $2 of risk in exchange for about 4 points of reward. All right, so that one could use a dip for a guy like me. And then as far as gold, let's go jump to the gold futures, because that's probably what I'll trade here. All right, let me go grab our trade sheet. Let me see, compounding. Oh, there we go. Give me one momento. Un momento, por favor. Where did I put it? There we go. Okay, so here's our trade sheet, and yeah, gold has been good to us. Gold profit here, gold profit there, gold profit there, some more right there, a little bit more up here. Not to jinx us, but gold has been pretty kind to us. Here with the gold futures is keep a lower time frame squeeze focus. All right, check the spreadsheet. Gold shows good signs of relative strength. Better score than every other sector, better score than the indexes, better score than every Big Ten name. Not too shabby. If we can find a name like that, it could make for a great swing trade. Catch on a weekly squeeze setup, catch it on a daily or a 2-day squeeze setup. On the other side, if we can catch that relative strength on a 1 hour, 30 minute, 15 minute, 5-minute squeeze, it can make for great short-term trading. You find your spot, you're in, you catch your push, taking a paycheck, and then sitting back waiting for the next plus. All right, little 15-minute action coming through. All right, there she blows. So that's the kind of thing I'm looking to trade. 15-minute squeeze, white arrow. Got the trend, the structure, momentum, perfect score. But now I got to get alignment. By itself, 15-minute signal. It just sets the stage for a push into 34.15, 34.20. So all by itself, think of that 15-minute squeeze like a piece of dynamite. All right, now I got to go find something to light the fuse. And that would be we take the 15-minute squeeze, pop open the hood, go check for alignment on your lower time frames. For example, you check the 5-minute, 1-minute, and the 2-minute, and they've got active sell signals. It's not great alignment for a push higher. If we check the current 5-minute, I wouldn't call that a great trigger right now to jump in and buy the 15-minute squeeze. I need that 5-minute confirming my thinking. This is just neutral. 5 out of 15, neutral trend, neutral structure. If they can turn it up a bit, rebuild some structure, maybe get a 5-minute buy signal going, then you think about buying the 15-minute squeeze. If your 5-minute goes from neutral to a sell signal, 15-minute, not going to get any better. But yeah, if for those of you in my room, keep a close eye on that one. Could be freshy for today. Okay, so I do like the GLD and the gold futures, and then a couple more here: Take Two, Crowd, ZS, and McDonald's. So as far as Zscaler goes, I want to buy it on a dip, and they ain't giving me a big dip here just yet. But really, really solid weekly squeeze. Momentum shift, white arrow, perfect score. I think from that you're looking 250 into about 260. But again, we trade 233. It's not a terrible entry. It could be a little bit better. If I buy the thing around 230, I'm going to maybe catch 20, 30 points of action in my favor. But I also might take about 30, 35 points against me. Would like it on a dip in the crowd. Another really good looking weekly squeeze. I'd be a buyer closer to 420, 400. So I do like those guys. And then one we're currently long is TJ Maxx with a good looking daily and a good looking 4-hour. Here's the thing, though. It's not going to be a TJ Maxx thing or a Palantir thing, an Altria thing. It won't even be an NVIDIA QQQ, an NVIDIA Google Tesla thing. It'll be a QQQ S&P 500 thing. So do I like TJ Maxx? Yeah, I love it. Perfect daily squeeze, great entry, good alignment. If JP comes out, S&Ps get hammered, QQQ gets hammered, do I think the trade works? It could work, of course, but I don't love the odds. Powell comes out, S&Ps break out, QQQ breaks out. Will the guarantee TJ Maxx does work? No, it won't guarantee anything. But I like the odds a lot better at that point with a better market behind it. So until tomorrow morning, that's kind of the $1 million question. TJ Maxx looks great. I like the weekly chart on MicroStrategy. I like the pullback buy in Palantir. All right back down to the daily 21. Good handful of things I would like to keep on buying. Now I got to figure out what kind of market do I have behind me. Is it a market taking QQQ back through 490, S&Ps back through 5,700? Is it a choppy, quiet, signalless market, or is it a market falling apart, dumping back towards the lows? Good news is, guys, we'll all be a little smarter in about 5-6 hours or so. But all right, y'all, any questions for me, any chart requests, drop them in the chat. We're long TJ Maxx. We got a couple Google calls for Friday. And the Google calls will very much be it's a QQQ trade, pretty much. But that is our book of trades, long TJ Maxx, long QQQ. And we took a little profit on crude oil on Monday. We got short from 59.90, took a little profit around 55.60. And then on the remaining contracts, stopped out at break even this morning at 59.90. So decent little net profit on the crude oil short. Now they might go and dump it again from here. I think it makes for a really good short. Somewhere closer to 62, maybe 61.50. But all right, y'all, any questions, drop them in the chat. And then, like I mentioned, folks in my room, I'll jump on the mic for the open. We'll hang out for a bit, talk shop, talk NBA playoffs, but I don't have anything to do here until maybe later in the afternoon. All right, Federico, good morning. Good morning. Not exactly related to the chart, but does MicroStrategy still totally attached to BTC? And how about Palantir? What's the rationale behind them? Okay, so good questions there. So in terms of does MicroStrategy anchor to and move with the Bitcoin futures. That's been my experience. So going back to MicroStrategy, if we check the weekly, it's a very similar setup to the Bitcoin futures chart. You had a big weekly squeeze back in September, October. White arrow, big breakout, squeeze kicks off a decent push from 125 into 500. Not too bad. Pull back, chop. Now you're setting up in a brand new weekly squeeze. And here's what I think: if they can get the momentum line back above zero, exactly like back here in September, we'll get another white arrow, and then I think it could be game on into 490, 500 plus. But to answer your question, if you look at the Bitcoin weekly chart, you know, same exact pattern, same exact ebbs and flows. Big weekly squeeze, momentum shift, white arrow, big breakout. The pullback, the chop, brand new weekly squeeze. And exactly like a MicroStrategy, really good trend, really good structure, waiting for a momentum. If they can get that, I think looking for a move here over time into 1,520K. So yeah, from my experience, they do tend to move pretty much hand in hand. Birds of a feather kind of thing. And then as far as Palantir goes, I'll be the first to admit I don't know anything about the company. we were talking about this in the main room yesterday. In no right or wrong way, I'm very much a chart monkey. Like I've got my charts, I've got my indicators, I've got the rock that I live under, and I don't know too much more than that. Like I don't know too much about the micro of the market, the macro view. I couldn't tell you anything as far as what is Powell expected to say today, good, bad, everything in between. Now, don't get me wrong. Do I know what Netflix does? Yeah. I'm not a total caveman. I know what a majority of the bigger companies do, but as far as Palantir specifically, I'm not too in tune. But even if I was, that wouldn't cloud my judgment in any way, shape, or form. Just me personally, I would never buy a company because of what I know about it, or something I read in a financial report, earnings report. To me, it's just good old fashioned price action signal and all the pretty colors. And from a price action signals and pretty colors point of view, I like the dip. So here's kind of the question: will it be one of these where, big push, big push, big push? You finally pull back to the 21 EMA, and then everything just kind of unwinds. Momentum goes into a sell cycle. You break your 21, break your 50. I know. Then they got to spend a couple of months trying to rebuild, doing all the excavation, bringing in the the cement mixers, rebuild structure, rebuild momentum. Then they go for another round two. So now the question is, all right, another big push back towards the same exact prices. Another identical pullback to the daily 21. Now, how can we hold up here this time around? And for me, here would be the cue to buy it. Above that daily 21 EMA with a daily buy signal, I begin to get some 5-minute buy triggers, 15-minute, 30-minute, 1 hour. That's my cue. If we were to go look from back here, all right, big pullback to the 21. Granted, the gap down does not help the bulls, but I can tell you just by looking at it on that one candle before the gap down, you have lower time frame buy triggers. So the candle of the 21st of February, no 1 hour buy, no 30-minute, no 15-minute, nothing saying from the ground up, buy that dip into that daily buy zone. I don't have any of that right now either. 5-minute neutral, 15-minute, 30-minute, 1 hour. If they can hold and then flip bullish, I like the idea a lot. mainly due to the fact they just fired a weekly squeeze. So it's very much a continuation idea. They got the initial push going, got the initial leg higher. Here's your first kickback. Now, how can they handle that kickback? If they're back into $100, 95, 90, 80, all right, that might be all she wrote there as far as a big push in the short term. I'd even give them down to $100. The next round of 15-minute, 30-minute hourly buy signals above $100. I am partial to coming in and taking a nibble. Good questions though, all good questions. Oh yeah, just rejoined since 2021. Awesome, that's awesome to hear. Yeah, guys, I'm really excited about all the changes here in the room. JC's back in action, back on the saddle. He's killing it. He's posting trades every day. He's got a couple sessions per week. But then even better is just just kind of taking that schedule, making it a bit more condensed and more of a central focus on what for a lot of us has been the foundation. The mastering the trade foundation, stacked EMAs, trend, internals, the squeeze. For me, luckily for me, all the things I love. I love. All right, good morning, folks on YouTube. Bid ask on MO kind of sucks. Yeah, you might not be wrong on that one. And if that's the case, to me, it's just like, all right, I'll go find something else to trade. And if all tree is the only good-looking thing, nothing else lines up, I'll take my dog for another walk. Let me check out maybe these 16s. Yeah, I mean, now that you mention it, I do think I remember that from the past. And here's the thing about crappy spreads. Um, you buy, call, catch a breakout, the thing pumps in your favor, then it's not too big of a deal. Catch a push, you take profit into strength, easy peasy. Those crappy spreads come against you on the way down. So I buy a call, the stock begins to break down, going against me. Then it gets tricky for what should be maybe a 20% loss turns into a 45 or 50% loss. Just on the funkiness of the spreads. So little things that don't make our jobs any easier. We want to aim to avoid those. Hey Saram, can I show a video on how to get the big three scores every day? Yeah, I can definitely grab the link to that video for you. Let me think. Where would that be? I gotta go check my. Yeah, so here's what I do. I'll let y'all go now. I gotta jump on the mic and take the fine folks in my room through the open. But before I do that, what I will do is I'll come back here in the chat and I'll send out a link for the video walkthrough that I have on the big three sheet, the scores, the rankings, all those awesome things. So give me maybe 3 or 4 minutes. I'll have that in the chat for you. But all right, y'all. Wish you all the best of luck today. International Jerome Powell Day. And I've had a few that have been very uncomfortable. It's been a pretty long time. Things you learn the hard way. But I've had some Fed days where, I'll go to bed that night thinking, man, I wish I just had done nothing. Got way too bullish too quick, way too bearish. Force these trades. The funny thing about the Fed day, we tend to get the real reaction the following session. So out comes Jerome. He spits his freestyle, drops the mic, walks age, and then boom, market heads lower, everything breaking down. Not always, of course, but sometimes the following day, you get the real reaction, big reversal, push higher, all those kinds of things. So if you got trades on the board, keep them small. If you're taking trades in the Fed, keep them small. Avoid the self-inflicted pain. But all right, y'all, thank you again. Go get them, and I'll talk to you back in here on Monday.